Hello, everyone. Welcome back to the TradeInformer podcast. This time I'm recording from home, not at the studio, but we have a familiar friend of the show, which is Greg Rubin, who is head of Axi Select, which is the prop arm of Axi. So, Greg, great to see you again. Maybe to kick things off, last time we chatted, it was sort of late summertime, and I think this has been a story probably actually for the past 12 months rather than just the past few months. But we keep seeing the collapse of prop firms. That was happening then. Have you seen anything really change since then, or is that something that's still going on?
Firstly, thank you, David. A pleasure to be back on the show and to speak to you again. Look, a lot has changed in our industry since we last spoke. Unfortunately, we have seen further prop firms being shut down. I think there were at least 50 in 2024. I'm led to believe firms, which is quite a significant number, especially seeing the size of the industry. And I think there were 50 players maybe 3 years ago. So it's crazy to see how those numbers are quite stark. With regards to change, just referencing what you said at the beginning, I think we can't just look at the last few months. I think we need to go back to the 2023 September, where this industry really changed with the shutdown of my Forex funds. That took the industry by surprise. They were one of the biggest players in the space. And what we've seen since then, well, is, quite drastic changes, but the ones that stand out for me is the literature change. Firms were very quick to change literature to signal virtual funds and demo accounts, which was not so transparent as before. Meta quotes have pulled back. Some firms still utilize meta quotes, but not all firms have access to meta quotes, and other firms have come in to take that space. I heard integration wasn't as simple initially, but I actually haven't heard much of it of late. So perhaps that has been, improved or is working fine now. I'm not quite sure. Uh, Traditional brokers who were acting, handling flow for the prop firms, a lot of the original ones have left and new firms have come in. We've seen brokered into the space offering prop firms. I believe we were the first, and quite a few other brokers, I think a handful of brokers have into the space since then. In terms of the actual program, or in terms of, the prop firm industry from a client's perspective and from a firm perspective, I think the biggest change has been the competition. We've seen consolidation, but naturally the competition amongst the different players. And I think that might have come with brokers entering, offering, more attractive deals. We are starting to see a lot of competition. And what I mean by that is if you look at the registration fees, you're seeing buy one subscription, get one free, or buy one, get the second one half price. You're also sort of seeing situations where, firms are saying if you pass the evaluation, you'll get a full refund. So with all of that, we've taken away the time constraint. You see very little firms will give you a time constraint. If you remember at the beginning, it used to be 30 days to pass an evaluation. So that definitely feels like the competition is eating into the bottom line and into the profitability. And naturally, I think is a huge factor why some of the smaller firms are shutting down, because it's difficult to compete. Whereas a lot of firms entered the space on the pretense that it was easy money. A lot of firms came in where the back end was all set up for you and they could just sell. And now that it's not that easy, we are starting to see some players exit the space, which I think it's a positive that the strong players will remain and continue to build and improve the offering. But it's pretty clear now that it's not as easy as it was, or it's not perceived as an easy place for sell firms to come and enter. So, and just one more point on that, I guess also traders are becoming more sophisticated, and well, maybe that's not the best way of putting it, but we are seeing a lot more traders come in trying to abuse the system, have learned more from the sort of prop offering. So a lot more focus has been on risk management, and rightly so, because not that simple of, just money in from subscription versus money out from paying traders. The need for more sophisticated controls, risk management, which has been spoken about a lot of late, I think is very important as traders become more familiar with these models, and naturally we see these sort of players.
Yeah, that's interesting you make that point, because actually when I go, which to be fair, I very rarely do, but when I go on my Facebook app on my phone, I notice that almost every ad I get is it's either a prop or it's one of these companies that says, if you pay us whatever X amount, we'll pass the challenge for you. And I noticed about 2 or 3 months ago that there was one company that had set up 5 of these companies probably, and then was just so you could see the same entity owned every single one, but they were advertising themselves as different companies. And from what I understand, that is a huge problem for the sector, right? Where it's very difficult to figure out who these people are. I mean, I'm actually curious if that impacts you guys as badly as it does for others, right? Because if you have a live money account, I would imagine it's slightly different maybe than if you are everything is synthetic, which I believe is maybe more easier to manipulate, but I don't know.
Yeah, I mean that's very well put in that sense. It's everything that's potentially wrong with this current model. The fact that it is demo accounts, the fact that it can be manipulated, because any firm that says to you, we can guarantee you profit in a trading market, you're wary of, because it's just not possible, right? It's a market. But my understanding is if they can guarantee or they are generating profits to pass, it's because they can take advantage of demo accounts, perhaps the latency, which you can't do within the live market. So quite rightly put, that would not affect us at all, because nobody can guarantee profits in the market if you're trading on live account in real conditions, because that's just not possible. That'll get laughed out the room very, very quickly. So I don't know what the results are. There's a chance that they actually can't, and but I've seen some of that, and like you, I get a lot of the prop firm information and on my social media as well. And I've seen more and more of these firms pop up. So there must be something to it, and if there is something to it, it's got to be of the fact that they could take advantage of the simulated environment.
No, absolutely. I think that some of them, I believe, are quite sophisticated, but I think this is a problem not just for props, but for brokers as well. But I think it's just that the sort of infrastructure that most props are using with demo stuff that seems more susceptible to it. But it's probably a whole other topic, and I don't want to get dragged down it. So, I mean, maybe sort of, I suppose as related to that, right? We talked about the fact that so many companies have gone out of business. Potentially there's these technical problems. Again, for people who aren't familiar with Axi Select, the setup is kind of different because you actually have a live account versus a simulated one. I mean, do you see of that becoming more common, or sort of I suppose in 2025, for lack of a original question, what do you sort of see changing, if anything at all? Do you see the industry, I don't know, consolidating more, or what's going to happen this year?
Look, there's so much change at the dynamic market. You gotta be a brave person to pin yourself onto something. But I think the big talk within the industry right now is regulation. I don't want to go down the rabbit hole of going into detail about what that means in terms of the industry or market, but I think it's quite positive. We are seeing a lot of players in the space being pro-regulation or talking about it more often. We are seeing regulators comment and different views from different regulators. It seems that they are becoming a lot more interested in the space. So I think we are heading in that direction. Again, I don't know exactly where we're at with that in the terms of regulators. From what we've seen from comments, tend to be all on different pages, but they do seem to be coming to the table, and I think that is a positive. How that looks, I'm not sure. What I can say is the sort of industry standard model that you see, I think, would need significant changes if it was to enter a regulated environment. I mean, again, I'm not a regulator, but just with the demo account and the subscription fee, and money in versus from subscription fee versus money out in the simplistic form from funded traders, I think would need some altering. So yeah, look, Axi Select, as you say, it's live account. There's no registration fees. You get the exact same trading conditions from a broker. It's something that when we created it, was supposed to sit between the broker space and the prop firm space as a quasi advantage for both, bringing in what you can get from the broker world to what we can offer in the prop world as a more centralized trading program as opposed to sort of speculating. So we firmly believe our model is in line with the direction of this industry. It's why we created it, and firmly believe that it is going to, not to say our model can't improve or can't change or naturally can't get better, but I think the premise, the way it's built, and it's built from a trader side of things, as opposed to encouraging speculation or telling people you go to get large sums of money in a short space of time. We kind of take the opposite approach. So it is built more around trading. And I think naturally, when you look at regulate or where the industries come from, a firm shutting down and some of the major players in the space pulling back, I think a more trader program as opposed to a speculative program is certainly the way of the future.
Yeah, and maybe on that point, right? I think part of the reason that this industry has blown up is the fact that the accounts are synthetic, right? And there's multiple reasons for that. I mean, it's partly, I think, it's probably the leverage that's on offer. It's sort of what you alluded to of, you can offer something that implies it's get rich quick, that kind of thing, which can appeal to people. And then I think also from a sort of marketing point of view, the fact that simulated obviously means it doesn't fall under a lot of financial regulations that would preclude people from offering the product in the way that they are. And so I suppose there's a long roundabout way of asking, obviously you've done things differently. You've been going for a year now. Do you think that has negatively impacted you, or do you think people have come to you and looked at the product and gone, oh, that's actually more interesting because it is a live account? And in general, if you can just talk about how it's gone, growth you've seen or not, as the case may be.
Absolutely. Look, we're very humbled by the success we have seen on our program to date. We have just over 24,000 traders with Axi Select in the short space of time. And I think when you judge success, of course, you want to see a lot of the traders on the program, but it's also how the traders are doing or how they've performed and, their stories. And we've recently launched a series with Axi Select traders discussing their journeys on the program. And it's honestly just incredible when you see these videos, when you watch them, and the people coming forward and asking to do them, wanting to do them, because we generally have changed people's lives, and we're seeing that. I don't want to pick, well, I shouldn't pick one out from many, but the one that I watched recently was a 21-year-old who started with $500, is now managing $500,000 of funds. And it's not every day you can put $500 into a trading account at a broker and be able to access and get paid on $500,000. He's also received multiple payouts from monthly basis. So you can hear that from it. It's better hearing it from the trader than hearing it from me. And it's quite visible over the internet, and there's more coming out. We're very thankful to these traders, but ultimately they've wanted to come and tell their story to show how it's worked. So we've, honestly very humbled by what we're doing in the sense, but when you look at the program and the offering, there are no registration fees. You do get access to live accounts.
You just thought this is an interesting product and kind of see if it works. And the second question would be, again, it's been going for 12 months. Are there things that have sort of surprised you in terms of, I don't know, changes that you've had to make to the product, or new features that people request, that kind of thing? I mean, from if you think, say, 12 months ago to now, are there things where you go, okay, we should, along the way you've had feedback X, Y, Z, and you think, okay, we really have to make these changes in order to make this basically a better product?
Yeah, absolutely. I mean, just to get to the first part, we were very hopeful when we launched. We understood this industry quite well, and one of the premises for launching the way we launched was to offer a program that we thought was better suited to trading. So did we expect to see the success so early? No, it certainly has exceeded our expectations in terms of the amount of traders on the program, and also the way they've advanced in their journeys, and the lot of love that we get for Axi Select for the program, the proposition. So of course it was a risk. The easy way would have been to offer what was already out there, to offer a similar model where the industry was, we launched was a few days after the MFF shut down, but ultimately that period of time was the height of the market where firms were just opening up left, right, and center, and we came with a completely different model. So there was a risk, but it was something we firmly believe in, and that's why we created the way we do, and we still firmly believe it's the right way, or a more suited product for traders. Not to say there isn't a need or demand for the standard industry model. Of course there is. But just in terms of traders and traders' ability to generate profit and forge longer term careers, we do believe our program is more aligned there. Have we learned? Absolutely. We pride ourselves on taking client input into account. I think it would be silly not to. So we do frequent surveys. We have a trading room with suggestions where we look at every single comment that comes through. I mean, obviously we don't implement everything, but I can say that every single review or comment, whether it's in the survey or whether it's in the trading room, we do take into account. Just at the top of my head, we've implemented 2 over the last 2-3 months actually. It's to do with the edge score. The edge score is an in-house score that we utilize to judge performance and progression on the program. And ultimately, the higher your score, the more funds you'll be able to access down the line. So the one thing that was noted was that, well, what if I started out early and I wasn't as good, I was new, but now I've improved my trading, I'm still going to be hindered by some of the old score. So we introduced something called a reset edge score, where traders can decide, well, actually, we want to start from the beginning with our score because we've improved or we've got a new strategy, and they can reset their score, start again to achieve a higher score. And that came off the back of client feedback that they wanted that ability. And the other one of our most recent developments is the launch of an edge score explainer. Now, this is an interesting one. As you know, we pride ourselves on transparency and being able to provide clarity to our traders. When it comes to the edge score, it's a little bit difficult because if we give the exact formulas away, well, everybody's going to be a pro trader because they'll game the system in today's world and they will all program it to all have a score of 100. But at the same time, we don't give you anything. Well, how are traders going to improve their score? So it's kind of a balance or a hard one. Well, we knew we had to do more. We were trying to figure out what we can do. And with a lot of questions from the traders, we came up with something called the Edge Score Explainer, which gives you your 3, it's dynamic tools, so it always is up to date, but the 3 formulas that are affecting your score the most, or the 3 ratios, are put displayed in a table with the direct translation of those formulas, without saying what the formulas are. Direct translation of the formulas are what you need to do to improve your performance, and it shows you, if you do that perfectly, how much your score can increase by and what your score can be at the end. And if you improve on that and it's no longer in the bottom 3, something else will pop up. So you can always see the 3 factors that are affecting your score the most, and with the intention to be able to improve your score and ultimately get access to higher funding. So those are the 2 recent ones that we took straight from traders input. And we have another survey coming up. So we always include customers. It's so important to what we do, and it's something we'll definitely continue to do.
Yeah. No, I think it's always at least for someone from the outside, it always seems difficult to know what you should implement and what you shouldn't. I mean, so when I was actually a stockbroker, not a kind of FX or leverage trading broker, but you would get small individual complaints, and then it's always difficult to tell, or feedback, right? It's always difficult to tell, is this someone we should actually listen to, or is this just kind of like one person who has this crazy idea that no one else is going to be interested in? But yeah, no, sort of slightly different topic, and really for my own curiosity, is this product proving sort of attractive across the board? I mean, geographically, because I'm sitting here in the UK. You can just quite easily miss that it might be something like this might be very popular in, I don't know, Southeast Asia, in Latin America, in South Africa, I don't know, wherever it might be. Or is it more specific to one region?
Yeah, it's across the board where we can offer it. It's been well received, and there are, with it being, actually being a regulated broker, and with Axi Select, being live accounts, there are certain countries that we can't offer the program in. So within the regions that we can offer it, we have seen tremendous success across the board. And again, if you look at it in a nutshell, if you look at the offering, it's basically get a live account, which you can do in any other broker, deposit funds into your own broker account, and then you get access to our capital plus the trading room without any fees involved or any registration fees. So naturally, it is a program that levels the playing field for traders and gives them the opportunity to access capital, which you ordinarily would not be able to do. Yes, it's a bit slow in terms of accessing capital compared to some of the other prop firms, but that you have to pay a subscription fee for, where this is your fund in a broker account. So naturally, we have seen across the board from regions because it solves one of the biggest issues for retail traders, the lack of capital.
Okay, so one of the things you sort of mentioned earlier is how you've released, and are still in the process of releasing, this video series, of traders speaking about their experience with Axi Select. So, in your opinion, what makes Axi Select a better choice for traders compared to other capital allocation programs or other brokers?
So I think when you look at this question, you need to split it into two, traders who trade with prop firms and traders who trade with other brokers. Because when you look at Axi Select as its core, what we created was this new way, revolutionary program, or revolutionary account, should I say, which encompasses what brokers have to offer as well as an alternative to the prop firm space, and an advantage to both. And what I mean by that is, let's look at the brokers. If you're looking at trading with brokers, ultimately what Axi Select is, it's a real life trading account like you'd get at another broker, and we set up an account with our funds that trades alongside that. So if you're already trading another broker, there's really no downside to Axi Select, because you deposit funds into your broker account, you deposit funds into an Axi Select account, which is a broker account, and then we put our funds into an account that trades on the side. So at the end of the month, if you've made money, if you're at a paying stage, you will then receive the money that you've made plus Axi Select's money. And if you lose money with whatever you've lost your broker, you've lost at Axi Select. So there's no difference. So in other words, what you do is you do exactly the same thing. You trade in the exact same manner. The only difference is, come end of the month, do I get a payout or not? And that is without paying any fees. So there is no risk in that sense. Of course, you also get the bells and the whistles on top, the trade room, the dashboard, the access to the edge score, the community, the weekly webinars. But from a pure trading perspective, you're not doing anything different. You're just trading an account, a real life broker account, and you get access to receive extra funding for not doing anything different than you would normally do. In terms of the prop space, of course, there is risk for new prop traders, because you've got to put your own funds into a trading account, which can be lost. So the risk is you can't lose your fund. But when you look at the model, again, our model, I firmly believe you're more likely to generate profits on the Axi Select program than you are on the general standardized model. I do accept it is longer to get access to funding, and it is naturally because we want to see your performance. We're not going to give and say to you, here's $200,000 after 2 weeks trading, but we give you fairer trading conditions. And I think that's the thing that's often overlooked when you look at these prop firms. People look at what funding they can receive, what registration fee they've got to pay, but nobody really takes into account, or very few, the actual trading conditions. How likely are you to generate profits? And that's where Axi Select is very different. We give you the real life trading account without restrictions. The only restriction is don't lose 10% in the stage versus making 5% of the stage, which is still incredibly favorable. It's 2-to-1 in the trader's favor. But we don't have anything like high watermark levels, trading around news, holding daily losses, holding positions over weekends. We allow EAs. We don't allow copy trading, so that is one other requirement. I guess one automated copy trading we don't allow. I guess you could call that a restriction. But ultimately, you have full flexibility of a real life trading account to generate profits. And that is very, very significant. If you look at our competitors, or you look at other firms in the space, there often are some form of requirements, because ultimately the model is money in a simplistic form. Again, it's not everybody's model, and I'm happy to say that people are moving away from that now. But the general, I guess, the standards model where a lot of firms will operate is money in from registration fees versus money out from the people who are funded. So ultimately, these restrictions and these rules in place are important, which restrict traders from ultimately progressing and being able to generate profit. So I'm not saying ours is the quickest program. You get larger sums of funds from a prop firm space. But if you're a trader and you're not looking to speculate, you're looking to forge a career, where you're looking to actually have a platform which gives you an opportunity to generate profit, then Axi Select, in my opinion, is far superior, far more likely to generate a longer-term gains than the traditional model. So I think Axi Select kind of incorporates the broker world and the prop firm world, and we operate in both spectrums.
Yeah, no, absolutely. I think Yeah, it's pretty unique, and you can see the benefits. But let's say I am someone who is at one of these, I'm at a rival broker. How simple is it for me to then switch over to use Axi Select?
So it's very simple, and I think that's what often the misunderstanding is what Axi Select is. An Axi Select account is a real life account at a broker. So to join Axi Select, you need to sign up for a broker account at Axi, and in the application form, there's a box that says Axi Select, and you tick that box, and you have an Axi Select account, like a real life normal broker account. You place 20 trades. If after 20 trades your score is 50 or more, you immediately onto the program and get access to the dashboard, to the leaderboard, to the trading room. So it really, all Axi Select is in its purest form is to open up a real life broker account. You trade your normal broker account, and our funds with our money sits on the side that trades parallel, where you can see how it's performing. And at the end of the month, the first of the month, automatic payouts automatically paid into your Axi Select account if you've generated profits from a profit stage.
Yeah, no, absolutely. And yeah, if you're, imagine, I don't know, someone who's at a rival or broker, or they're using a prop, and they're maybe a bit more of a sophisticated trader. If you could give a sort of tip on how they could take their trading activity to the next level, what would that be?
Join Axi Select. No, but like jokes aside, it does encompass that. If you're a new trader, you get the access to the learning material, and you get access to the structure. If you're a pro trader, or you're looking to advance your career, you get access to that capital, and you do get the boost. But to answer your question in a more general manner, if you're looking at the prop firm, or you're looking at a prop firm to use, and you want to utilize the standard model, I mean, again, there are plenty of merits to it. I would say look at the trading conditions. It's something that's too often overlooked, where people want to know that, as I said, the funding and the level. Look what restrictions there are in place. Look how likely you are to generate profits. And the firms that don't have those restrictions in place, those are the firms that I would look at, purely because you've got to be able to generate profit. Now, I know trading's difficult at the best of times, in the best conditions. So if you're given hard conditions, or you're giving stringent rules, it's ultimately going to affect your ability to trade. So I would have a look and focus on the ability, on how likely I am to generate profit.
Yeah. Okay. Fine. Then we can share that. Okay. Maybe to finish off, this is a bit of an out there question. I don't know if you'll have the answer, but I think there's some expectation that since Trump has become president, that we'll see sort of higher volatility. That was certainly the case when he was in office last time, and I think a lot of traders were happy to see him back in the White House. So does that sort of change how you guys think about things, or would you have any sort of advice to someone who's got an account with Axi Select, or is thinking of opening an account with Axi Select, about how you sort of manage risks around that?
Yeah, I mean, it's a valid question. We definitely saw more volatility when Trump was in. He also used to tweet a lot regarding his views and the sort of market. So I think Twitter became quite popular last time he was in office, in terms of getting his direct thoughts. He didn't really speak; he spoke directly to you. Look, we already have seen more volatility since he's come in, and I do expect that to continue. For us as a broker, ultimately, and for traders, volatility is what everybody is after. The brokers enjoy that. The traders, to get volatility, well, that's ultimately the environment that you look for. So I don't see that as a negative. Of course, you highlight risk management. Absolutely. With volatility comes, of course, potential for greater profits, but also potential for greater losses. So it becomes a lot more important. And definitely, I think traders need to understand that the markets are going to move a lot quicker, that risk management, or having stop losses in place, they're always paramount, but it becomes obviously a lot more important. So yeah, I think we will see more volatility in the market. I think where we're at in the cycle, and I think where we're at in terms of what we have seen over the last few years at the sort of heightened levels in many asset classes, with rates rising, I do think we are meeting quite a crescendo moment for these markets, irrespective of who is in charge. So I do think the next few years we are going to see increased volatility and larger swings in both directions. So some fun times ahead.
Yeah, absolutely, for the world and for the prop space. So, Greg, thanks very much for chatting with me, and yeah, hopefully we can catch up later this year or something.
Thank you, David. Speak to you soon.